Hello everyone and welcome to another edition of the weekly Forex Trading Outlook. Okay, in front of us we have a chart of the Euro US dollar, and we're just going to speak about what happened last week and where is the currency pair headed in the days and the weeks to come. Okay, taking a look at the Euro US dollar, we see, let me just recap and draw an important trend line that the currency pair broke a few weeks ago. You see this downsloping trend line. The market traded above this trend line here, broke it here. And what happened last week was the market came down and tested the broken trend line. And broken resistance normally acts as support, or can act as areas of support, and that's exactly what the market did. Came down to this broken trend line and bounced off of that trend line. So it came down to about the 132.90 area and bounced. Taking a look at the market also, we see that this level here is also roughly corresponds to 0.618 retracement level, between 0.618 and 0.786 Fibonacci retracement. We see that the low was 133, just above 133, and the 0.786 is 132.58. So it came within 40 pips of the 0.786. And this area is also important because of another thing that I speak about often, and that's pivot points. As we can see, this is a chart of pivot points, monthly pivots, and the market came within a couple of pips of the monthly S2, which was 132.70. So what we have is a confluence of indicators in terms of Fibonacci retracement, pivot points, and a broken trend line. So if you entered a trade around this area, well, a position trade around this area, that would be a good trade. That's not to say that the trade will definitely work out in your favor, but you will have a number of pieces of quote-unquote evidence to piece together that would indicate that this market would have bounced around the 130, basically around the 133 area. Okay, digging deeper down, let's take a look at, this is the 4-hour chart, and for the bulls to gain some more confidence, we would have to see the market close above this 135.50 area. I mean, a daily close above 135.50 would indicate that the market is headed back up. And for the day traders out there, if it clears 135.50, that would indicate also that the momentum has returned to the upside in the euro, and you would have more success buying dips rather than selling rallies in a market with an upward momentum. So that's what happened. That's what's happening in the euro. We're looking for a close above 135.50, and on the downside, 133 is critical support for now. Okay, so taking a look at another market, we have the British pound, and what we are looking for is this area here. The market is respecting this downtrend line here, and this 160, this about 162 area is acting as resistance. But interestingly, the 158, 50, 159 area is acting as support. So the market came down and tested support here at 159. Let me just pull up my cursor to see the exact level. Exact level is 158.94. So the market came down last week, tested the area and bounced. So what we're looking for is to see if the market has enough energy to close above a daily close above 162.50. Would indicate to me that this market would continue this upward pulse. And if we do close below 159, a daily close, remember, always look for closes below the resistance level. A daily close below 159 would indicate that this market could be heading down. So things are pretty much balanced until we break out of this 159, 162.50 consolidation area. Okay, taking a look at the Japanese yen. This market was in a triangular consolidation pattern, and we see that the market broke out of this consolidation last week. So the momentum has returned to the upside in this pair. Now for the bulls to gain more confidence, we would have to see a close above 160. This 160 level, the market has to close above it for the bulls really to get the upper hand. And if it does close above 160, we should see the market test the 104 level. So much about success in trading involves actually knowing how to analyze the market properly, to know what you're looking for, what the professionals are looking for, and then knowing where the momentum is on the daily chart. And then if you're a day trader, you can dig down into the lower level charts, but it's always important to know where the momentum on the daily chart is. And the final market we're going to take a look at is the British pound Swiss franc. And we can see here that this market is in a rough channel with 148 acting as resistance, and I would say this 140.80 area as support. So the market tested this 148 area 1, 2, and is testing it again. So a prudent trade to make is you sell at resistance. So you could enter a small sell at this area with a stop above the channel to see if the market then returns down to 141. If it works out, fine. If it doesn't work out, that's okay too. But you just risk a small position on that. And we'll be looking to see if the market can close below this 140 area. So if it works out, it will be a 600, 700 pip move maybe. And that's a trade idea in the British pound Swiss franc. Remember, when we're trading, we can't run away from losses. Losses are a part of trading, and if you don't take trades and take intelligent trades, you won't be able to have long-term success in the market. If you have any questions, you can send me an email at beyond@acestrading.com. I hope you enjoyed this update. and I will see you again next week. And just as announcement for the Auto Trader accounts, uh, for those who didn't see, we did enter a long position on the euro, and we'll be looking to build that position. We are up a couple of pips as of this recording, and we're just hoping to capitalize on the move upward in euro. Okay, thank you very much for listening, and have a good trading week.